Good morning, hello and welcome. You're with us on Opening Bell and I am Surabhi Upadhyay. It's a brand new start, a brand new week. An event-heavy week is behind us. The budget, the RBI policy, the trade deal all done. Over the weekend, of course, we had the framework for the Indo-US trade agreement as well. Of course, it's just a framework right now. Negotiations then continue to finally nail down to a bilateral trade agreement. It's a positive Monday morning because across the world, what we are getting is, a risk on trade. It started with Wall Street on Friday and it has spread across Asia. So lots to talk about. Let's get started with the headlines first up. A risk-on start across Asia. Japanese stocks have hit record highs with the Nikkei zooming past the 57,000 mark for the first time ever after Prime Minister Sanae Takaichi's landmark election victory. The ruling LDP's two-thirds majority has boosted confidence in stability and reforms. Asian markets are tracking strong gains. Back home, the GIFT Nifty expects a positive start. Wall Street staged a powerful rebound on Friday. Both the S&P 500 and the Nasdaq surged over 2%. The Dow crossed the historic 50,000 mark for the first time ever. US stocks notched their best day since May last year, driven by a sharp recovery in tech stocks after the recent rout. Nvidia charged up 8% after CEO Jensen Huang said that $660 billion in AI capex build-out is sustainable. Oil prices holding steady as the US and Iran have held talks on Tehran's nuclear program mediated by Oman. Markets remain cautious despite efforts to bridge sharp differences. Gold saw a sharp rebound on bargain buying and a softer dollar. Silver staged a good recovery as well. It jumped almost 9% on Friday after slipping below the $65 mark in the session earlier. Meanwhile, Bitcoin has also reversed, climbing back above 70,000. The interim India-US trade deal brings tariff certainty for key export sectors. 25% tariff linked to Russian oil purchases has been removed, while the new 18% tariff will take effect shortly. The deal also sets a broader strategic framework, with India planning to buy nearly $500 billion worth of goods from the US over the next 5 years. And good numbers coming through from State Bank of India. It posts a 25% jump in profit, aided by a sharp decline in provisions on a sequential basis. The PSU banking major also raised its FY26 credit growth guidance to 13 to 15% from 12 to 14% earlier. Meanwhile, Tata Steel's India business showed resilience, even as overall revenues came in slightly below estimates. The company's European operations remain weak, though losses narrowed marginally. Okay, so those are the headlines at some of the action, and they tell you that the setup seems extremely positive as we're looking at a new week breaking out on Dalal Street. So it's risk on. It's risk on Wall Street. It's risk on across Asia. And we've got markets hitting some pretty big milestones. On Friday, the Dow was up over 1,200 points. And as we just told you, it actually went on to scale the 50,000 mark. What a big rebound in tech stocks. And we've seen that every time there's a tech shakeout, the buyers come back in. And at least for now, that seems to be happening all over again. So Nvidia 8%, Broadcom 7%, Palantir 4.5%, Oracle, all of these AI-related stocks jumped quite sharply. Though I must note that shares like Amazon were still under pressure. Alphabet, Amazon, these were still down. Amazon, of course, which is doing a mega $200 billion spend in AI-related capex, that was down about 5%. Now, it wasn't just tech. It was actually a pretty broad rally on Wall Street. The Russell 2000 index, which is a small cap index in the US, that was up over 3.5%. The VIX, the volatility index in the US, fell a very sharp 18%. Now, the risk-off was very evident in the way commodities and currencies moved as well. So the dollar, it pulled back from 2-week highs. The dollar typically rises when there's a lot of risk in the market. And as the dollar pulled back, we had cryptos gain, we had precious metals gain. So therefore, we told you in the headline that the Bitcoin, of course, managed to recover quite smartly, about an 18% rally in the Bitcoin on Friday. Spot gold and silver prices were up anywhere between 4 and 8%. Futures were also higher. And oil continues to be range bound. Now, as far as yields are concerned, the US bond market, that was fairly quiet. We didn't see too much happen. All eyes are going to be on the non-farm payrolls report for January this week. Remember, this report has been delayed because of the US government shutdown, so watch for this. This morning, things looking very good across Asia. A 5% rally on the Nikkei because the Japanese Prime Minister Sanae Takaichi has won the snap election by a huge margin, and she's seen as someone who's very pro-reforms. So the market seems to like the sound of that. The yen has managed to weaken a little bit versus the dollar as well. Actually, it's not just Japan. Most Asian markets are feeling good. The Kospi, last time I checked, was up about 4% as well. The Hong Kong markets are higher. So all in all, it's looking very, very good. Now let's talk about the local trading setup. The Nifty managed to navigate these huge events last week actually pretty resolute manner. The index was up about 1.6, 1.7% for the week. The mid-cap index had some gains as well. And right now, the Nifty is trading above a lot of the key simple moving averages. So technically, we seem quite okay. And most technical experts feel that right now we are in a band of about 25,500 on the lower side and 25,800 on the upper side. The question is, can the bulls break on the upside above this band? Quick check on flows. Interestingly, domestic institutions were sellers in Friday's market action. They sold off stocks worth about 1,260 crores. FPIs, were selling about 1,950 crores. So that's what we had, negative from the FPI front. So those are the cues. The question is, can the bulls continue to prevail on the street or not? We have our technical as well as our fundamental guests joining in. Vishnukant Upadhyay joining in from Master Capital Services, and we have Amrish Baliga joining in on the fundamentals. So, gentlemen, good morning. Great to have both of you with us. Thank you so much for joining in. So big event week out of the way. Amrish, let me open with you. How's the feeling this Monday morning?
No, feeling clearly is good because like we had a lot of positives last week. Your framework for the US trade treaty is in place. I think we should be signing off decently soon. And the other thing is earnings are also getting over the next 1 week. So earnings have been mixed, slightly positive. The monetary policy is over. So I don't think there are any big events which can disrupt the markets, at least in the next couple of weeks. So clearly, the way I see it is in this rally, which has started last week, I think we should be able to cross the earlier highs. So I would be bullish in the markets, at least for the time being. But I think the only, from a caution side, I think the only issue remains is the Russian oil, because there's still no clarity. Both the ministries are, not really specifying anything, the Commerce Ministry nor the Foreign Affairs Ministry. And as always, I think the biggest risk for not just the Indian markets, the global markets, is President Trump.
Well said. That's true. There are still those who doubt what really is coming out of this trade framework and whether these rates, these tariff rates, whether they're going to last or whether, we see very quick changes depending on how these negotiations go. So that's a valid point. By the way, we're doing a full-blown discussion on the trade and tariff agreement at 9 a.m. But for now, let's ask Vishnu how he's feeling about the market. Vishnu, we're not too far away again from those all-time high levels, right? Barely some 2% away. So, is the overall setup, is the overall construct positive for this week?
Hi, Shilpi. Good morning. Thanks for having me on the show. Yeah, definitely. I would say all of the major development has been settled down, be it US-India trade deal, be it RBI policy meeting, union budget. And I think in days to come, we are expecting market to hit a fresh all-time high. In a week or in a 2 week, definitely. But for the day, we are all set to, see a gap up opening in the Indian market, as market will probably take this from the strengthening global market. So I think somewhere around we are opening 25,900. But one thing I would like to highlight here, that we should not, chase this gap up opening, because many times we have seen that if market, gives such kind of gap up huge opening, we normally see a profit booking from the higher level. So today I'm also expecting there could be a profit booking from the higher level. So let the market down somewhere around 25,800 to, build a fresh long positions in the market for the day.
Yes, the GIFT Nifty indeed is at 25,922 as we speak. So let's see even how these levels are going to be, breached, scaled, and if there's sustainability at those levels or not. By the way, viewers, just reminding you that you can keep sending us your questions right now. The next half hour, Our experts are here with us. So if you have any queries, we're answering them live on indices or stocks or overall market questions. So keep those coming through. Amrish, on the trade deal, let's actually start right there. Because we've got, a lot of these bunch of exporter stocks and we've seen the volatility there. But towards the end of last week, they were also cooling off quite a bit. Your Gokuldas Exports, Wellspun Living, so on and so forth, Apex and Avanti. After the pop, the day the deal was announced, and there was a cool off towards Friday. Now that the trading sentiment is over and done, from a portfolio perspective, would you be buying into any of these stocks?
Yes, surely still makes sense. I mean, again, assuming that the trade deal remains for a slightly longer term and the rates remain without any penal tariffs again being imposed. We have seen a major correction in all these stocks when the tariffs were imposed. So from those absolutely low levels, we saw a decent bounce back. And whenever there's a decent bounce back based on news, there is some amount of selling which comes in from those who bought at lower levels from a trading perspective. But still, they are quite far away from where they can reach. Based on fundamentals, based on the sort of revenues and margins they can have going ahead. So in textiles, surely I think there is still a decent amount of upside left. And I would surely look at stocks like Welspun or a Himmat Sinka, which anyway, have moved about 20-25% from the lower side. But still, I think there is at least another 35-40% upside left. One could look at, the auto ancillaries. One could look at light engineering, specialty chemicals again, are the ones which are going to benefit quite a lot. So these are a couple of sectors one should be looking at.
Okay, so Himmat Sinka, maybe something like a Wellspun Living you mentioned, are stocks that you could consider. What about the shrimp feed exporters? Is there a fundamental case for any of them, Amrish?
Yeah, see, shrimp feed exporters anyway, found other export markets once the tariffs were imposed. And now with the US again opening up, I think it should be extremely good for them. Although there's a decent amount of competition, but still, I think they would see margin increases going ahead.
Okay. Vishnu, same question to you. From a short trade perspective, or even if someone is thinking of adding these stocks for a couple of months to the portfolio, do any of them make the cut for you, US exporters?
So basically, I'm not majorly focusing on the company which has a highest exposure to the US. In fact, as Mr. Amrish highlighted that we have very volatile nature of US President Donald Trump. So if we are gaining something from this US India trade deal. So I'm in this confusion that in future case, if there could be any negative news for this, so there will be a very worse impact on that company. So definitely we should invest in that company fundamentally. But from the technical point of the view, there are few companies on my radar. From a metal sector, there is a Gallant Spark, and from power sector, there is a Z Vernova. So these two stocks are looking quite good for a short to medium term.
Okay, can you just repeat the names? There's Gallant Ispat, and the other one you said?
Gallant Ispat and Z Vernova.
Okay, GE Vernova TND. Got it.
Yes.
GE Vernova and Gallant Ispat. Those are the two trades of the day that Vishnu has told us. We should put those stocks up on the screen, and you can probably remove the graphics. Gallant Ispat and GE Vernova TND are the two trades that Vishnu is going with. Also, good time to talk about today's stocks in news, because we do have a couple of important earnings that we need to go over. A whole host of mid caps have reported, a couple of large cap names have reported. So let's do one thing. Let's quickly run through the stock headlines of the day. Okay, with that, let's talk about some of these stocks in news. Now, State Bank of India is the first one that I want to start off with, and State Bank of India's numbers actually look quite good. State Bank of India has delivered almost on all counts in Q3. The profit is up about 23%. The loan growth is looking very, very strong. There's a slight increase in net interest margins to 3.12%, and the bank is saying that a 3% margin level is very sustainable. The asset quality is absolutely phenomenal, pristine for State Bank of India. Sequentially, of course, we've seen a big reduction in provisions, 1,000 crore reduction in provisions sequentially. The gross NPA level has come in at 1.57% versus 1.73%. So sequentially, massive improvement in asset quality. And the slippages and the credit cost have also come down at lower levels. Now, what is SBI saying? The SBI chairman is saying that they'll be sticking to their net interest margin guidance of about 3%. They're saying that they don't see any unpleasant or negative surprises on asset quality at all. They are expecting deposits to grow between 9 to 10%. And the guidance on credit cost is 50 basis points. So, that's the guidance from State Bank of India. Let's talk about Tata Steel. Slight mixed bag for Tata Steel, but more positive than negative. The volumes in the India business are at record levels. So, they've just sold a record amount of steel in the quarter gone by. 6 million tons is, what they've done. The EBITDA margin, the consolidated EBITDA margin has expanded to 14.4%. The India business has been very robust. Good profitability for the India business. The margin is at 24%. UK operations are still loss-making at an EBITDA level. So that pain point continues for Tata Steel. The management says that the domestic business will be strong and they're guiding towards better pricing in their India operations on a sequential basis. So that's Tata Steel. Let's come to Shree Cement. Profit up almost 38%. And this is despite the operating numbers being a little subdued for Shree Cement. The revenue growth is about 5%. The miss for Shree is again the volumes, because their total cement sales are up only 2%. So volumes are a bit of a disappointment. A lot of the other cement companies have done better than Shree. So let's watch for how the stock reacts over here. The margin has also come down. Year on year, the margin has come down to 19.5% versus 23.3%. So those are the big earnings I picked out. By the way, on earnings, watch out for Kalyan Jewellers as well. It's another scintillating quarter for Kalyan Jewellers. Let's look at some stocks beyond earnings as well. Other newsmakers today. Good news coming in for Biocon. Fitch has upgraded the outlook for Biocon Biologics to positive from stable earlier. So that's good news. There is IPCA, which is in news. It has received an establishment inspection report for one of its facilities. IRDA is raising funds worth almost 3,000 crores via a QIP. So IRDA is going to be on our radar. And BEML is setting up a new facility in MP. It's a 1,500 crore rupee investment. It's a greenfield rail manufacturing facility. And they're looking at, a project completion timeline of about 5 years for this one. So some interesting stocks in news as well. Okay, let's go back to our experts then on their thoughts on some of these. Amrish, the big earnings. Let's go over SBI and then Tata Steel. What did you think of the numbers?
Both the numbers, I think, were decent. SBI especially was extremely good. In fact, we have seen a extremely good move in the last 1 year. I think about 45% move in SBI. But even at these levels, it makes sense based on the sort of numbers we've been seeing in the last 2 quarters. I think this momentum is going to continue, at least in the foreseeable future. And especially when we're talking of a possible, a merger among the top 12 banks which are there, PSU banks. I think that consolidation is going to happen over the next 12 to 15 months. So that, I think, would be another trigger, because finally we'll end up, I think, with about 4 or 5 large PSU banks. And SBI clearly is the number one out there. So from here, I see a move possibly to levels of about 1250 to 1280, at least over the next 6 to 8 months. And as far as Tata Steel is concerned, I think clearly
Tata Steel?
They've gone in for cost control, which is in fact adding to the margins. So Tata Steel also, I'm positive, looking at levels of about 240 to 250.
Okay. By the way, gentlemen, we're getting some queries on our live YouTube feed. There is a viewer who wants a view on Senco Gold, saying I have 1,800 shares in Senco Gold, bought at 352. Is it possible to see a breakout? Given the recent moves, news flow on trade deal, gold and silver, so on and so forth. Vishnu, I don't know if you've seen Senco of late, but if you could give an overall sense on these jewelry stocks. I want to tell our viewer over here that a lot of the gems and jewelry exporters who benefit are actually in the non-listed space, who look at the US market as big source of revenue. a lot of the listed players, including Kalyan, Senco, they have large operations in India itself. So they may not be the biggest beneficiaries. The biggest beneficiaries could actually be unlisted gems and jewelry players. But Vishnu, Kalyan, Senco, overall view on some of these jewelers.
Well, so I think if you look at the chart of Senco Gold, it's looking quite good. Last week we have seen a very highest momentum in this stock with fresh buying participation from the lower levels. So I'm expecting this momentum is likely to remain intact with the potential upside towards 360. So if someone is holding this stock, I would prefer to advise maintain the existing position with a stop loss of below 310 and target will be around 360.
Okay. And within the jewelry pack, will Senco be a better pick? What about Kalyan? Has great news with it actually, Vishnu, today, because the numbers are once again looking good. There's also obviously Titan, bunch of other jewelers as well. What do you like the most in this entire pack?
Basically, technically, if you analyze, Kalyan Jewelers is a very beaten down counter. It has also declined from the 550 to 380 and also taking support somewhere around 200 week exponential moving average. So from that front of the view, favorable risk reward, we can also bet on the Kalyans, and because stop loss is a very tiny, we can put a stop loss somewhere around 340, and for the higher side, room is open till 470. So in Senco and Kalyan, I would from the fresh buying point of the view, I prefer to go with the Kalyan.
Okay, all right, got it. I have time for one more query. This is coming in from Rasika Nayak. Rasika is asking any information on the trajectory ahead for ABB. All right, Rasika, let me toss that to Ambrish and see if he can take it offhand. A lot of these stocks, the capital goods stocks, Ambrish, have kind of gotten forgotten, right, in the last few months. I mean, they were really the stocks of 2024, I think. Any thoughts in case you've seen some of the fundamentals around something like ABB, CG Power? CG Power reported numbers, of course, over the weekend as well. Do you like anything in this space?
See, in fact, if you look at most of these stocks, and especially ABB has been flat throughout the year. And although it's recovered from the lower levels, which is closer to 4,600 or so, I mean, clearly going ahead, I see, CapEx improving, CapEx spend improving, and that should benefit ABB, where I think we should see, the order flows improving over the next couple of quarters. So at levels of about 5,800, I think it's a decent buy. Upside could be about 6,800 to 7,000.
Okay. All right. That's a view on ABB. Vishnu, just taking a word on, some of the other stocks that have been in news today. SBI, obviously, it's got great news around it. There are lots of brokerage upgrades that have come in on SBI as well. So just give us the next levels to watch. And within that pack, banking or even frontline NBFCs, which stocks do you like? Do you see any trades today or maybe for the next 1-2 days?
Yeah, so definitely SBI, has given a very good corrective fall, and from the vicinity of 21-day exponential moving average, we have seen a very sharp rebound in this stock, and prices are now all set to touch a level of somewhere around 1120, 1130 odd levels. On the lower side, I would prefer to advise to maintain stop loss somewhere around 1040. So yes, we can go with a SBI in a PSU space. If you talk about the NBFC space, so I would prefer to bet on the Shriram Finance, which is currently trading around
Shriram Finance. Okay.
Yes, Shriram Finance. So it's a consolidating in a thin horizontal band of 1030 on the higher side and 970 on the lower side. So after giving such huge momentum, upside momentum in the prices, it is now consolidating and forming a sort of rectangle kind of formation. So I'm quite sure prices are now all set to explode on the higher side, and we are all set to see levels somewhere around 1080. So from NBFC space, I would prefer to bet on Shriram Finance, and from PSU banks, there will be SBI.
Okay. I have time for one more viewer query. This is from Bindi Mashruwala. Bindi is asking about Power Mech. Vishnu, I don't know if you've seen the chart of late. Any interest in Power Mech? She bought shares at 3,200. So just wanted a view on it in case you've seen Power Mech.
Power Mech project, right?
Yeah.
Well, so technically there is no strength in this stock because prices are continuously forming lower highs, lower lows kind of pattern, and it is also trading below the cluster of all key moving averages. So once prices invalidate 2420 sort of level, so there would be some strength in the prices. So as long as prices are trading below 2420, there will be negativity, and selling will occur from the higher levels. So if you have any position, so maintain stop loss below 1990 and try to get exit on the higher levels 2400.
Okay, Vishnu, thank you so much for taking our questions today. Very, very helpful. Just, give us any other trade. I mean, you mentioned two stocks. Any other trade of the day, Nifty, Bank Nifty. Just revise for us what your key day trades are from a technical perspective.
Well, so should we in index, we will definitely keep eyes on our Nifty, and we will wait prices to come down towards 25,800. If prices comes towards that level, then definitely we can go long. But I would prefer to play a Bank Nifty rather than Nifty. It is looking relatively more strong than Nifty, and we are also set to see a gap up opening in Bank Nifty as well. But the key levels to watch somewhere around 60,300. So if prices comes close to that level, 60,300, our intraday pick will be Nifty. Sorry, Bank Nifty.
Okay. All right, Vishnu, thank you so much. You have a great trading session and, really helpful that you took all the queries of our viewers as well. So thank you for that. Thank you.
Thank you very much.
Amrish, just some final points before we, thank you, before we let you go. I mean, earnings season pretty much is drawing down to an end. How do you sum up this Q3 season? Which were the stars that kind of stood out for you?
In fact, like I said, it was a mixed sort of a bag. But the ones which actually stood out are in the auto ancillary space, specialty chemicals. Did slightly better than what even I was expecting. So these are the ones to be really looked at from a medium to longer term perspective. IT, was sort of I would say a slight amount of disappointment, no doubt. Earnings as well as the management commentary. So that's one space where I'll stay away, at least for the foreseeable future.
Okay, IT, yeah, too many doubts around IT and pretty volatile moves at that. Amrish, this is that point of the segment where we urge our viewers to urge our guests to give a compounding idea to our viewers. Not a trade, it's an investment idea. What do you have in mind this Monday morning?
See, my investment idea at this point of time, again, talking of long term, I'm talking of the next possibly 2 to 3 years, but my price target would be for the next 1 to 1.5 years. The stock is Himadri Specialty Chemicals, which is a leading integrated carbon and specialty chemical manufacturer, which is Kolkata based. And they have the complete carbon value chain, right from coal tar distillation to downstream offerings like carbon black, liquid coal tar pitch, as well as specialty oils. And they cater to diverse industries, right from tire, aluminum, infrastructure, electronics, and pharma. In the last 10 years, they've steadily shifted focus from bulk industrial products to high margin value added products, about 60 grades of specialty carbon blacks. And currently they are in the process of setting up India's first large scale lithium iron phosphate cathode active material plant. And this is used in lithium ion battery. They have strong presence in the export markets, so the US treaty also would be positive for them. Products are sold in about 45 countries, and in the last 18 months, they've taken over Birla Tires and they've relaunched it. So the bottom line from Birla Tires will get added, possibly from FY28 onwards. They also made strategic investments in EV battery value chain, and two other startups they have invested, which have synergies with Himadri. If you look at the Q3 earnings, they were quite decent, 35% PAT growth. EBITDA margins improved to about 22%. I'm expecting an EPS of about 18 in FY27. And with that, my price target is about 630.
Okay, so the Himadri Specialty Chemicals, that is the stock that Amrish is going with. We should get Himadri up on the screen. And in the meantime, since the pre-open session has kicked off, it's 9:05. Let me do a quick check on what the market is up to as well. So in the pre-open, the Nifty is opened around 160 points up. It's a good-looking screen, and the index is inching, towards the 25,900 mark, 25,860 in the pre-open. Let's get the pre-open rates up on the screen. We should also get Himadri Specialty Chemicals up on the screen. Let's see what's working. SBI, I mean, a lot of brokerage price targets on SBI are northwards of 1,200. The stock is looking very, very good this morning. 1,100 plus on it. State Bank of India, that's a 4% upward move that we've already got on it. Kotak Mahindra Bank is the other one, up about 2%. Tata Steel's reacting to numbers. That one's up about 2% as well. You've got names like Tata Steel, Hindalco, JSW Steel. Actually, most of the metals are on the upside this morning. We should put up some of these prices for you as well. What else? We've got Adani Enterprises, Ultratech Cement. These are some of the other names which are up and about. That State Bank of India looking quite good. Gain of about 4.5% on that stock. The other one is Kotak Mahindra Bank. Let me see some of the other stocks that were in news and see how the pre-open is playing up for them. Let's get Kalyan Jewelers for you on the screen. Kalyan has had a very, very good quarter, solid quarter. Stocks up 6.5% as we speak. So Kalyan should be on the radar as the market opens up. And then we have all of these exporter stocks, which are again very, very excited because we finally have that framework. And at least in the framework, that 18% tariff rate is a reality. So a lot of the exporter stocks like Gokuldas Exports, Avanti Feeds, Wellspun Living, Apex Frozen Foods, all of them have opened, with smart gains in the pre-open session. So it's looking good. The Nifty, by the way, is building on the gains. The Nifty is up almost 200 points now in the pre-open space, 25,888 on the screen. And these exporter stocks are really leading that rally today. Amrish, final advice before we thank you. I mean, the market's practically coming back towards its all-time high. But even when the index was close to all-time highs, I mean, it was always difficult to make money in mid-cap stocks.
Absolutely.
What's your overall advice looking at the market now that all of these big events are out of the way for us?
See, the issue earlier was that we were seeing new highs in the market, but most of the portfolios were bleeding because they had more of mid-cap and small caps. But in this rally, I see again the mid-cap and small caps performing because they had come to extremely decent levels in the last couple of months. And we had some smart investors buying into them at lower levels. So the way I see going ahead is we'll have a lot of PMSs, family offices, HNIs buying into these small and mid caps, which will generate that momentum. And then you'll have the retail investors again jumping back. So I think 2026, we should see small cap and the mid caps outperforming the large caps.
Okay, so small and mid caps may outperform the large caps. Got that, Amrish. Thank you so much for being with us. Great to have you with us on Opening Bell today. You have a good session and a good week ahead, and we hope to connect again soon. Thank you. All right. Okay, back to the screen. Let's see what else is in focus. By the way, PFC and REC, the boards have agreed to the merger as well. REC is going to be reverse merged back into PFC. And this is something that was announced in the budget. So those stocks are in focus as well. PFC 1.4% up for the time being. And REC, last I checked, was up about 0.5% as well. So yeah, that's, those are some other stocks that are in focus. Watch out for BEML. Like I said, that it's setting up a new facility for, railway manufacturing, spending about 1,500 crores. So BEML is a stock in news, and that's up about 2% as we speak. Going back to State Bank of India, the gain on SBI is 5%. I mean, it's a massive, massive move on State Bank of India because earnings have been just sublime. I mean, you can't complain at all. Margin is above 3%. They're saying it will stay above 3%. The asset quality has improved significantly. Gross NPAs have come down to just about 1.5%. Provisioning is down. Provisions are down over 1,000 crores quarter on quarter as well. So it's been looking very, very good. And apart from that, Tata Steel's numbers are also pretty well received by the market. Actually on the Nifty, barring an Eicher Motors, which is slightly negative, there's nothing else much, which is down quite a bit. For Eicher Motors, now talking about this US trade deal, of course, the import of big bikes, does become a lot easier. But the analysis is suggesting that if you talk about, say, a Harley Davidson, I mean, the share of bikes which are northwards of 600cc in the Indian market is very, very small. So it's unlikely to eat into, the businesses of, say, a Bajaj Auto or a Hero MotoCorp, because the primary, market there is about 125cc. That's the big space. Aisha, for now at least, is down about 1%. Some sentiment negative over there on Aisha Motors. Let's take a look at what else is moving in this market. Like I mentioned, SBI, Kalyan, these are all, result reactions. There's Gokuldas Exports, which is up about 4.5%. Goldium International is up because of the gems and jewelry drift. Goldium gets a lot of its revenue by exporting gems and jewelry to the US. And that's one stock that's up and about. Gokuldas is the other one that is up at this point in time. So many names, something like Nitin Spinners, SP Apparel. In general, textile and apparel as a space is, looking extremely clear. I think, we should be getting to our next guest in the next couple of minutes. We'll have Ajay Srivastava join in to talk about, really what it means for the market. The Nifty, as I was saying, is actually barely 2% away from the all-time high. So check the Nifty. Nifty 50 is about 2.25% away, 2% away actually, to be precise, from the all-time high. So it's just a matter of time. But the question is, can the broader market start participating or not? Okay, we have, some research coming in from Moneycontrol Pro to talk about this India-US trade deal and what it really means for individual stocks. Neha Dave of MC Pro is with us now. Neha, good morning. We're getting into market opening in the next 2-3 minutes. But just in terms of a summary, and a lot of these stocks, by the way, are very excited in the pre-open all over again. But in terms of the summary, which are the ones that we should keep on our radar, where there's a real boost coming in, potential boost to the business?
So obviously it is a gems and jewelry segment, where the interim trade agreement has some very good news because electronics and pharma was already exempted from tariff by US. But what the interim trade agreement talks about is the aircraft parts, which is another segment, and gems and jewelry. There could be a complete removal of tariffs, and which is a very good news for the stocks like Goldium International, wherein 90% of the revenue comes from US market. It is also good news for IGIL, which certifies the diamonds that are exported from India to US, and because a significant portion of their revenue is also from US markets. And for auto ancillaries, it's a very good news, and some of these forging companies, especially that has exposure to US markets like Ramkrishna Forgings, Bharat Forge, also Sona BLW, there is good news going by what the interim trade agreement has laid out.
Okay. I'm just checking IGI, International Gemological Institute. Yes, indeed, it's up about 3%. So the two stocks that Neha named, Goldium International and IGI, International Gemological Institute, both beneficiaries of this trade agreement, and both are up and about. Neha, just, a question on the textile exporters, because the stocks have been very volatile. I mean, the day the deal was announced, there was a huge rally, then they cooled off, now they're up again. Just in terms of a percentage of revenue between some of these listed names, say Gokuldas, Wellspun Living, Pearl Global, etc., as a percentage of revenue, which ones perhaps would have significant exposure to the US?
Yeah, so all these stocks have a varying exposure to US markets, and the positive impact overall for the sector as such will be majorly because the 50% tariff which was there earlier. Because of that, there were certain order deferrals, there was cancellations which led to production rationalization by these companies. They were operating at the capacity utilization was lower. In fact, they were discounting the products to US markets primarily because to preserve the long-term relationship with the US clients. Now with this reciprocal tariff coming down to 18%, this is a very big news and good news for the textile sector, because this will help them, that there will be order inflows, the capacity utilization will improve. And obviously we have seen the impact in the price. Some of the stocks had rallied big time last week. In some segments there, but investor needs to be very careful, because in some segments the valuation has to be matched with whatever the positive news flows has come in. from a macro perspective, it is a very labor-intensive
Okay.
sector, and it's a very good news, that the exports again look promising for this sector.
Sure. Sure, absolutely, Neha. A little short on time because we've run into market opening, but thank you very much. That's very helpful analysis. And a lot of these stocks are leading the charge this Monday morning thanks to the framework between India and US. That trade framework is finally a reality. And that's the opening that we have for you, 150 points higher. It's pretty much in step with what the GIFT Nifty was indicating, 25,850 on the Nifty right now. Let's look at the gainers, and SBI is going to be topping the charts because SBI has come out with a blockbuster set of numbers for the third quarter. SBI up 4.5%, looking very, very good. It's actually taking obviously the Bank Nifty up with it. The Bank Nifty is doing even better than the Nifty. You can see it on your screens there. 0.7 of a gain on the Bank Nifty, while the Nifty is sitting with a gain of about 0.5%. The other stock is Kotak Mahindra Bank, and I think there's some relief on Kotak Mahindra Bank because it doesn't seem to be in the fray for IDBI Bank. And I think the street is taking that in a positive stride. 2% up on Kotak Mahindra Bank as well. There's Tata Steel that's reacting to numbers. Tata Steel's, at least the India operations were looking very, very good. And that stock's up about 1.5%. So that's your first trade. The second order is the stock that you're seeing on your screen, Infosys and its other large cap technology peers. They're all rebounding from last week's slam dunk. Remember, last week the Nifty IT index had lost 6%. So today there's a bit of a recovery rally on these stocks. TCS, HCL Tech, Infosys, most of these stocks are up and about. These are some of the positive names. Reliance is helping the bulls case quite nicely. Reliance itself is up about 0.5%. So these are your major gainers. On the losing side, not too much to really count. Nifty losers will include names like Max Healthcare, Power Grid, Eicher Motors. These are some of the names on the way down. In general, the auto space is a little quiet. Mahindra & Mahindra, by the way, is going to be reporting numbers this week later down. M&M, for the time being, is flip-flopping between red and positive. There's ITC, which is slightly lower. HUL, Nestle, some of the FMCG stocks are on the lower side of the screen. The Bank Nifty is really charged up. That's your sector of the morning, up almost 1%, all thanks to State Bank of India. SBI pushing a gain of almost 6% as we speak, looking very, very good. Now, that's the large cap picture. Let me talk about mid caps. The mid cap index is actually a little better off than the large cap index, up about 0.7%. And the gainers here are going to include a lot of these export names that I was referring to earlier. Yes, and indeed that's the case. Look at Gokuldas, 5.5% up. Apex Frozen Foods, 6% higher. Wellspun Living, 4%. Avanti Feeds, 3.5% as well. Some of the other names like Goldium International, for instance, up on the green side of the screen as well. So these are the names on the upside. Beyond the India-US trade deal stocks, the other mid-caps where earnings have been a pleasant surprise. For instance, Kalyan Jewelers. Kalyan is up almost 6% as we speak, looking very, very smart. So that's up and about. Some of the chemical stocks like Aarti Industries, up about 2% as well. They, are looking at the whole, trade deal positively. In the hope of being more aligned in global supply chains when it comes to chemical and API exports. So these are some of the names on the upside of the screen. Overall, it's looking pretty good. By the way, Shipping Corporation of India, 12% up on Shipping Corporation of India. Something to note as well. Plenty of names on the upside, and the mid-cap market is looking very, very good. Okay, so that's the opening. The Nifty is now settling down with a gain of about 120 points. On that note, let's move on. I think we've got Ajay Srivastava joining us. Do we have Ajay? Let's see if we can connect with Ajay Srivastava.
Morning.
Ajay, hi. Good morning. Good morning. Good Monday to you. Big
Thank
week
you very
out
much.
of the way. I'm just still sighing in relief. How are you feeling?
The lesson is never have a market opening on a Sunday. You lose your money, you lose your Sunday both.
True, because it never ends then.
I tell you, really.
Well said. But by the... Ajay, by the end of last week, we had that hint of recovery come in. And this morning, we've woken up to really terrific cues. Suddenly, everybody's buying these US tech stocks again. Asian markets are surging. So overall, what are you feeling now?
I think it's good. I think what's happened in Japan today morning with this party getting the super majority 3/4 is going to be great for the world economy, because I think they are the ones who are going to spend the way into defense. They're going to spend the way to rebuild the economy. So I think it's a great story coming out of Japan, which was kind of silent for the last 2 decades or so. So something has come up which can perk up. So Europe is perking up. You have got Japan perking up. So two of the dead bodies in the system are perking up, which is great for the world trade. And, America is what is doing, extracting its pound of flesh. So America has got its pound of flesh from everybody, including us. And therefore, they have a great economy. You saw the Dow, what happens there. So worldwide, there is an uplift in the sentiment in the market. Let's put it this way. There's been and number two, of course, as always, there's a shift. What money was going from equity to bullion to silver has now stabilized, and money is coming back to equity. Cycle remains the same. The moral of the story is to us is only one. I keep telling my team is book your profits when the time is ripe. I think every time you don't book your profits and expect it to continue, you lose money. So contrary to the old theory of buy and hold for whatever time till you're alive, I think the mood is just book your profits when you can do it. If you can divorce your wife, why can't you divorce the stock?
You're on a roll this Monday morning, huh? Lots of very interesting analogies.
Well, people get really attracted more to the stocks. People get more attached to the stocks than people.
Than their spouse. That's good. I think that registers loud and clear. Don't get forever wedded to a stock. Just taking your cue. But I think you made the point very well that profit booking is essential. Don't get wedded to a stock forever. It's not that kind of a market, perhaps. And I think that's a different way of thinking, Ajay, compared to this idea of compounding where you're supposed to buy stocks, hold them till you retire, and then retire very rich. So you're saying it's not that kind of a market?
Oh, of course not. You just saw what happened. In silver and gold. You were sitting on 4 lakh rupees a kg. You're sitting on 2,70,000 a kg. It disappeared in a woof like this. So whoever had book profit, good luck to him. Didn't book profit, saw the net worth disappearing. Did you borrow to buy at 3 lakh, 4 lakh rupees? You are in serious trouble at the end of the day. So I think, the moral, and name any stock in the world. Nobody has. Look at Microsoft, was flying till about 3 years for last 10 years and see what's happened to it this year. You see Meta collapsed, but is coming back again. Google was supposed to be falling behind everybody, has really become the star of the year at the end of the day. And nobody was buying Google maybe a year back. And if you're not sold off some of the stocks, if you're not sold Microsoft, got into Nvidia, if you're not sold Nvidia, got into something else, your returns are pathetic at the end of the day. The problem is, and I can tell you, Surabhi, I don't think any investor sits down and computes, what's my internal rate of return? They all pick up the success stories. I have seen all along. And tom the success stories, never looking at the laggard, never looking at the average rate of return you're making in your money. And I can promise you a lot of them make even less than fixed deposits or debt instruments. So I think the trick is, have you booked your profits? Have your average rate of return? Compounding is good in a steady economy. Then comes Trump. We had 3% tariff. Now we have 18% tariff. And that also, somebody's going to pay the cost of buying expensive oil. Somebody in India. We will pay the price of that. So it's not like one-way street. Everything is good in the trade deal. We will pay the price for higher price. So somebody like Trump comes and upends the global system, in which case all your theories of compounding go for a toss.
No, I take your point. I mean, the world will continue to be a very different world till we have, this US president. And we have to learn to live with volatility. I completely take that point. On the trade deal, so let's break it down, Ajay. When you've got all these exporter stocks, they're not very big stocks from a market cap perspective, but people love to kind of trade in and out here and there. But for someone who's looking at some sort of portfolio allocation, now that we have a deal, does it make sense to be allocating to a Gokuldas or to a Pearl Global or, any of these exporters?
I would say in India, you have got a brilliant choice of auto and auto ancillaries. We are number one in the world with that. There is no Bangladesh there is no Vietnam there is nobody, China there, sits there. We are supremos in the world, and some of our companies own a lot of stuff in Europe and America. I think there's one segment which I've always put my money and still would bet against the world is the auto and auto ancillaries. I think we are good. Two-wheeler space, we are superly good. And auto ancillaries, we are really strong. And we have got good quality companies worldwide supplying to everybody. I think that's a great place to be from the export side. The second is engineering exporters. They offer high value added product. The problem with garments and all this is, it's just so low end of the product that how do you make, as a shareholder, how do you make money out of such a company? The promoter may make some money, but that's all right. But then you got Vietnam, you got Bangladesh, you may have a new country coming tomorrow and saying, I'll offer you cheaper products and all. And the worldwide apparel trade doesn't make money for anybody, really speaking. The brands are dying, profitability is down, everybody's in the dumps, the discounting is going on. So if your end market is not flourishing, then how can the suppliers flourish? People are moving to holidays, experiences, than buying garments today. I have investment in a high-end premium company, and I can tell you it's a dumb investment at the end of the day. All right, because therefore I would say, yeah, though topically makes you may have excitement of these companies coming up. You book some profits if you can book profits, and you get out. The problem is these shares are so illiquid, and they're so. I'm not alluding any motive, but they are run by people who know more about the company than you will ever do. And therefore, you will be the last person to realize when to sell out. So the problem in small caps is that the coterie of people who monitor it, and they do it quite well, they will know exit first before you will ever realize what happened in the company. And going to a low-end segment of the world economy, garments and all this thing, is not really sensible allocation of your capital. You need to go to the upper end where there is value, where somebody can get your engineering exports in India. They get value. Auto, they get value. Garment making a odd $1 garment, I don't know. Not my cup of tea.
So no, I get, okay, that's a strong argument. I get your point. That's why I started by saying that these are not very big stocks in general. I mean, they're not a huge part of the market, but auto and auto ancillaries. So on that, I mean, there are two ways to look at the auto space, right? There is the export play. You can look at some of these large companies, whether it's a Samvardhana or, maybe a Sona Comstar, etc. And they have like big operations and big markets overseas. Or you can look at a local OEM play. I mean, M&M has made a lot of wealth for people over the last couple of years. There is PV, etc., two-wheelers, etc. So which part of auto would you like to play more?
I think certainly two-wheelers, because we're exporting large. You saw Bajaj Auto result, you saw everybody, TVS. They're really exporting large. And if all the tariff barriers come down the way they are supposed to be, you will be exporting a lot more to the European markets, to the American markets, maybe not too much to America, but definitely South America. You got Africa is opening up and stabilizing. So at the end of the day, a two-wheeler company are really strong. Unfortunately, we have only one company which exports out of India, or the automobiles, or unfortunately, I can name it Maruti, that's the only one, but does significant export, is a phenomenal company, sits on the cash balances of a kind unheard of in India. So it's a more a local play. Their exports are very small, not very small, but small percentage of the total turnover. But two-wheelers, we are strong and we are exporting and we are good. And when you said if any OEM in India, which is a pure local play, I think is a sub-economic play at the end of the day for shareholder, for the company. You really can't keep doing for India, and running this operation at the end of the day. If you're not exporting, that means you're not a quality operator at the end of the day. It's not about whether he has chosen not to export. I can promise you 9 out of 10, his products are not good enough to be exported. That's why he doesn't export in India. So why go into a company which ignores rest of the world markets and only focuses on India? Rather go to a company which does export, keeps quality up, and when those players come to India, or auto companies or car companies, they will buy from such players. So I would rather put my money in global focus, auto OEM focused companies in ancillaries, rather than a pure domestic play. Some of them are good domestic plays. I'm not saying they're not good, but it just bothers me that why would you not explore the export market when a Bajaj Auto or a TVS is doing so well in exports?
Okay, so that's on the auto sector. By the way, I'm just looking at some more stocks. Again, many of these are result reactions. Shipping Corporation of India, let's get some stocks up on the screen as well, is surging 13 to 14%. They've had a superlative quarter. Their profits have zoomed up in a big way, and their revenue has also gone up pretty significantly. Yeah, I mean, there's a 22% revenue growth. EBITDA has surged by some 90%. And profit in the third quarter has come up at 400 crores. Profit last year, same period, was about 75 crores. So something's really gone right for SCI. And then, of course, there is Kalyan Jewellers, which is now locked up in a 10% circuit. So these are stocks on the move. By the way, the mid-cap index is really, really surging. The mid-cap index is now double the Nifty in terms of the gain. Nifty is up 0.5%. The mid-cap index is up a whole 1%. And the Bank Nifty is charged up as well. Bank Nifty is up about 1% as well. So it's a really strong morning of trade. And a lot of these gains are more in the broader market than in the Nifty itself, Bank Nifty obviously has SBI to thank. What a move on State Bank of India, 6% on the higher side. Ajay, we have to talk about, overall banking and financial services. And SBI just tells you that, and it's that debate that we've had in the market. A lot of people have been wondering, mid cap, small cap kharidna hai ki large cap kharidna hai? And then you have a result like a State Bank of India come along, only reassert the fact that sometimes just staying with old and boring names can really work. So first of all, how are you looking at BFSI? We've also got the monetary policy done. Yields are still high. What would you play, and what does a result like SBI really tell us?
See, I think, you said old and boring. I don't think SBI chairman will agree to that, because he's been touting his YONO and he's been saying, I'm a young company.
No, he
so
won't.
I'm not sure he'll be flattered. I'm not sure he'll be flattered by old and boring. Okay.
Oh gosh, you're going to get me in trouble. You're going to get me in trouble, Ajay.
I didn't say you said old and boring.
I meant in terms of businesses. It's not AI and all of that.
No, but I think
you are on a roll. I have to watch my words very carefully.
I didn't say anything. I'm just saying to the guy that I think it's a PSU doing a great job at the end of the day. That's the bottom line of SBI. One simple line. Yeah, PSU doing a great job. It's it's got trust of the people. It's got people trust with money. If you go to the retired people, age 50 and above, they love to put money in SBI. I think they've done needful. They've done the mutual fund. They've got insurance. So, they've done all the right things, which an HDFC and ICICI done, and with a much lower valuation at the end of the day. And so I think that's the story of SBI. It's a core of this Indian market. But, again, back to the point of shareholder returns and allocation of capital. If you look at a 10-year perspective on SBI, that's not mainly so attractive as an investment. It will do is short-term bits. It just booked it just booked the profit that you see is also because it booked extraordinary income on a mutual fund sale, etc. So it's not necessarily operating profit coming. But the key part of banking re-rating is two things that are happening in the economy. One is a lot of foreign money is directed towards coming here. And, you saw the deal of RBL, you saw the deal of, various of the banks, you saw in India First, etc. So I think foreign capital is coming here. And beauty is that now we are going to see the next phase where the interest rates are going to go up, not down. Down phase is over at the end of the day. Banks will be pricing themselves up. And if you see what happened in the last 48 hours, the state government loans, they have gone up further in terms of the yield. Even the government yield has gone up to 7.77, and they've gone up. So I think by nature, the earning stream of the banks is going to go up now. The earlier cycle was the earning stream was going down with interest rate cut, but the deposits are holding. Now the cheaper deposits are going to come into play, and the rates are going to go up. So this phase of the banking in next 3 years is going to be reversed. Our NIMs are going to go up, the margins are going to go up, they're going to make tons of money because interest rates are going up. And government needs to borrow money, so they have to sell security at much higher rate of interest than what it is doing today. Yes, there could be MTM, but MTM is a small portion of their portfolio. The key is the income is going up because government will borrow higher, state governments will borrow higher, you and I will have to borrow at a higher rate of interest, while their FDs are now locked in for 5-7 years. So there's a ton of money coming their way, let me tell you, in the next 3 years. The banks are going to banks always make good money when interest rates go up. Historically, you can see that. They always make good money. And that phase is now coming.
That's an interesting point, Ajay. And I was looking at the bond yield as you were talking. Maybe we should fire up the bond yield as well. It's continued to harden. If we look at our benchmark 10-year bond, I'm talking about the 6.33% 2035 paper, the yield has moved up to 6.74%. I mean, it closed at 6.72. It had crossed the 6.7% mark on Friday after the policy. And this morning it strengthened even more. But Ajay, overall, coming to final thoughts for the market, in an environment where the RBI has been providing liquidity, cutting rates, even then, for the bond yield to harden like this, for the reasons that you mentioned, central government is borrowing more, state governments are borrowing more, isn't that overall a bit of a risk, a bit of a negative for the market?
As I said, different sectors will happen differently. And then banks will make tons of money. So you have a banking index which will climb, as they're saying. On the recipient side, the people who are going to borrow this housing finance loans, etc., they will go up. And the vehicle loans will go up. So yes, you will pay the flip side of it. But again, back to the point. This is where the profit taking comes in. You'll go through euphoria of the US deal and exports and so on and so forth. And then you will come to the reality that when interest rates go up, your discounting factor goes up of equity returns, and you start to look at realistically what happens to portfolios and large borrowers. So answer is yes. The question is the timing may be very different. We all get euphoric at the same time. Historically, we've gone old enough to see everybody gets happy and euphoric at the same time. Everybody gets pessimistic at the same time. Silver was a star a week back. Silver is a dog today, and that goes across everybody. The key is, do you have the money to buy when you have a dog, which makes good sense, and you have a liquidity to buy, which is why profit booking is important. Keep your liquidity intact, because when market corrected on last Sunday, did you have money to buy? When the commodities are correcting so rapidly, do you have money to build up your portfolio? Buying in euphoria is the easiest thing to be done. I think the key is profit out of euphoria and wait for the day when you will get a maniacal Friday or a worse Sunday.
Okay, that's important advice. Always make sure you have some dry power to invest when those manic days happen. Advice well taken. Final question, Ajay. Then on those manic days, what should you be buying? Give us 2-3 good ideas. Some evergreen themes.
Okay, I'm on the still on the side of things that the old concept of 10% bullion and silver is a rubbish concept. Absolutely. They are the best investment you can ever have. They're the best friends. They're like better than dogs, I can tell you that. And they always give you returns. Okay, maybe silver less, so 75-25. We always recommend it. Keep building it up. It should be 1/3 to your portfolio, not 10% as most guys tell you. Companies can go up and down. That's the poor part. Gold does not go like this. Gold is finite. We import it. There is no choice about it. And it's the biggest reserve currency in the world today. So my advice is increase your proportion to precious metal at this point of time. The number 2 is at least increase exposure to global markets, because you cannot not invest in global markets. See what's happening in Japan. Europe has done financially well. US was subdued last year, but is picking up steam. So you cannot not invest in global markets. And in India, the theme is book your profit, keep some core holding, like stock exchanges. You don't sell stock exchange shareholdings because they are going to keep growing. They have monopoly. Maybe one new exchange is coming up, but there's enough firepower. So some shareholding, you just keep a core and don't move from that. You don't even bother to trade. Rest all is up for trade, guys, because if you don't book profits, you will always have a suboptimal return. So 1/3 is your precious metal, 1/3 is international market. Out of 1/3 India, half should be your longer term holding, which you will not touch. Half is what you play with and get your excitement. And if you really want excitement, I keep saying, just go jump out of the plane. With or without parachute. It may do wonders to your excitement.
I think you've made your point loud and clear. Be nimble, keep booking profits, and keep powder dry to invest the days that you have those manic shakeouts, because that's when you actually get a good entry point and a good chance of making a good return. Got that point. Ajay, fantastic conversation as always. Thank you so
very much. Have a good day.
And have a fantastic day. We look forward to connecting again soon. Thank you so much. All right. Well, the market's actually chugging along quite nicely. You've got a 100-point gain on the Nifty. Mid-caps are really surging today. That's where the action is. Mid-cap index is 1% higher. More names. Godrej Properties, 5.5% on Kalyan. That temporary 10% circuit has opened. Now the stock's up about 12%. Then you have the shrimp exporters like Avanti Feeds, 6% on that stock. So many names. Newgen Software. You've got Shilpa Medicare. I could just go on and on. Oswal, Pumps, Webber Global. It's a huge, green sort of sway across the mid-cap screen today. That's what's playing out. By the way, we were just discussing the RBI policy with Ajay a while back. Another very important development that happened on Friday during the policy was the RBI has now decided to allow banks to lend to real estate investment trusts. This, of course, is going to be within certain guardrails. Guidelines will come out soon. But yes, REITs, as they're called, will eventually get access to bank funding. Now, why is this important? How does it change the dynamics? Let's ask Preeti Chheda, who is the representative of the India REIT Association, and she's also the CFO of Mindspace REIT. Preeti, great to have you with us. Good morning. Thanks for joining in.
Good morning, Surabhi. Thank you so much for having me here.
So, Preeti, let's start from the basics. I mean, we all heard that announcement in the RBI governor's speech. I'm not sure if there's any further fine print that's come out so far. But first thoughts, bank lending to REITs. I think they were already lending to InvITs. But now if they're allowed to lend to REITs, what does it mean?
So, Survi, I think this was a much awaited reform that we were expecting. I think the biggest thing it does is it opens up another avenue for funding for REITs. So what was happening is today at the REIT level, the only option which REITs had was accessing the debt capital market, where essentially the investors were mutual funds or say insurance, pension. The preference generally for mutual funds, most of it was subscribed by mutual funds, was generally 3 to 5 year instruments. And we really didn't have access to long-term capital, like say a 10-year instrument. With now the banks getting an opportunity to lend to REITs, what it really does is, one, it helps us get access to long-term funding. So today, we don't have too many takers for 10-year instruments. So with banks coming in, that clearly helps. Number one. Second, even in terms of filling the short-term funding gap, say like for example, you want working capital limits at the REIT level. So that's another thing which is now going to be opened up. And obviously, the very fact that you're able to add one more set of investor at the REIT level, which can give you long-term debt funding, I think that's an extremely big positive, and we are thankful to RBI and the government for enabling this.
Okay. So, in terms of just the cost of capital, what are the primary sources now for a lot of these, real estate investment trusts as they're looking to, acquire more and more assets? Which would be the primary sources? What has been the average cost of borrowing so far, Preeti?
Right. So, one, I think very positive for any lender to be giving to the REIT is, one is at the REIT level, you have access to cash flow from all properties which are in the REIT. So from a risk profile also, it actually mitigates risk than actually lending towards just one SPV at the REIT. So this is one big advantage which all the lenders have, and which is actually helping reduce cost of funding. So today, say our cost of funding will be anywhere between 7.5 on an annualized basis, which is definitely much better than what you would get at the REIT level. It's almost, I would say, about 50 to 70 bips difference. So I think that's a very important thing for a REIT. And especially when you are expanding, whether organically or inorganically, these are some sources of funding which actually help you grow the portfolio. So this is, again, as I said, a very important development for the REITs.
Also, Preeti, just demystify for our viewers, because REITs is sort of a hybrid instrument. It's a quasi debt instrument, and we were just discussing this. That in general, there is a bit of a pressure on rates, despite RBI's rate cuts. We're seeing bond yields continue to harden. We're looking at the 10-year now above 6.7%. So, in an environment, if the bond yields remain elevated, what should be the return expectation by investors?
So I think we are now at a cycle, where the REITs are able to now, if you look at the last 6 quarters especially, one, of course, the earnings have been very robust. Almost all the REITs have given close to double-digit returns. So I think it's a very healthy phase for the REITs. The interest rates also have sobered over the last, I would say 6 quarters. Even if they remain at similar levels, or even if marginally they go up, I think we are still in a very good position. And I think that should help sustain these earning numbers that we have shown in the recent past.
Okay. So, Preeti, final advice to anyone who's looking to become a REIT investor. I mean, in between, the REITs were delivering great returns, right? And by the way, viewers, we have 5 listed REITs here in India. Mindspace is, of course, one of them. What would be your final word of advice? And what's the outlook for this year, 26? In general, what should be expected for the 5 listed REITs?
So, Sylvie, if you look at the 4 REITs are office REITs and one is a retail REIT. If you look at the office net absorption this year, it's been the highest ever. It's gone even beyond the pre-COVID level. So I think the office markets are doing very well, backed largely by the GCC demand that you are seeing in the country. So I think going forward also, the momentum should be continuing. And I think for the viewers, the general advisors, these are instruments which are actually giving you the best of both worlds, both capital appreciation as well as regular income. So I think this is one instrument which I believe everybody should have in their portfolio allocation.
Okay, all right. Preeti, we'll leave it on that note. Thank you so much for joining in.
Thank you.
Good to get that perspective from you. And let's see how this really plays out. More bank lending coming in for real estate investment trusts. Thanks very much.
All right, thank you.
Okay, back to the market. The equity market continues to. Thank you so much. The equity market continues to chug along. 0.5% gain on the index. Even better if you're looking at, the bank Nifty or if you're looking at the mid-cap space. But the market now to really track is the commodity market, because that is the one that has got all the headlines in the last 4-5 days. It's been on a complete roller coaster, and like we told you at the start of the show, there was a big rebound as the risk-on sentiment came back on Wall Street. There was a rebound overall in gold and silver prices. There was a rebound in cryptos as well. So where are we, in this roller coaster cycle? I have with me Manisha Gupta joining us right here in the studios. Manisha, welcome to Moneycontrol. Good to see you.
Thank you, Surbhi. Thank you. I appreciate being here. Thank you.
So Manisha is our resident commodity queen, and we decided to go to her because beyond the point, we can't understand what's going on anymore. Silver crashing 15-16%, rising 9%, Bitcoin down 16% on Thursday, recovering 11% on Friday. What is going on?
Well, I'll start with silver, Surbhi. And, Friday was 10% of gain. And today we've opened nearly 4.5% on the higher side. Silver seems to be coming back. For the longest time, as in for the couple of weeks, it was between $70 to $90 of a range that silver was playing. We did see 60 on the lower side as well. It seems to be consolidating around $80 at this point in time. Every dip is getting bought into, and when you look at the outlook for silver 2026 from Bank of America to JP Morgan, it's a very big range that everybody seems to be talking about. The most bearish, by the way, is from JP Morgan at $50 an ounce. And then you have Citi and Goldman Sachs talking about a range of 85 to 115 on the higher side as well. So it's quite spread out in that sense. 3 or 4 things are quite clear. One, it is a froth. There was a lot of speculative money that came in. Institutional and retail money came into the markets as well. The fundamentals have been strong in any case because you're looking at a deficit for a 6th straight year in 2026. Industrial demand seems to be catching up quite soon. The mining is not picking up as much, and there's no proxy as of now as well. So silver will continue to be in flavor, will continue to be volatile. But a lot of people should tell me that it's going to be around 80-85 of a fair average that silver will come and stand at.
But you're saying there are some targets above 100 on silver.
We've seen 121 of an all-time high already.
We have them, now we have some of those targets on the screen. So let's get back to that graphic plate because there are a couple of these global banks that are saying more than 100 is possible. What's their rationale? I mean, on what basis do they expect this price to cross 100?
Because for the longest time, you have seen gold in people's portfolio. You have seen central bank buying gold as well. But now silver is a very tactical buy as well. And some of these central banks have started to buy silver also. Silver also is in a critical mineral list for US. China wants to contain or curtail its silver exports as well. So those are some of the factors there. But the markets are scared that if the silver prices run up too much, then you have industries like solar and semiconductors and chips, etc. Would it be viable for them to then keep continuing to use silver? Will they start to look at a proxy for silver? So there are those both kind of ranges and conversations and narratives.
And gold? Gold still, I think there are still people calling for the possibility of 6,000 on gold, right?
Oh yes, it's a 6,000 club really, because in silver, while you have a very divergent view coming in, but for gold, not like that. Gold, everybody is very sorted. $6,000 to $6,300 an ounce of an upside is what most people are anticipating onto this one. The interest rates will still be cut. Geopolitical tensions, tariffs, all of that is still on. And then the central bank is buying, debt concerns, debasement theory, all of that has been very, very supportive.
I'm just a little scared when I see a screen like that. That graphic, we should just look at that graphic. Manisha is there on the screen. The graphic is there. All of those banks are calling for more than 6,000 on gold. When there's such a consensus in the market usually goes the other way. So that's my only concern. But anyway, take your point. So gold and silver, I think people are still calling for higher levels. Now, so that's a beautiful looking graphic. Almost near consensus that gold is heading higher. Now let's talk about crypto.
Oh, yes.
What's going on here?
Well, 10-15% of a move in crypto is something that you get used to, but that's something that we have seen come in for various commodities as well. So crypto is not the only very volatile asset on your screens anymore. Having said that, we have seen an all-time high of $126,000 on Bitcoin, and it's trading at around 70,000 right now. Friday saw a low of 60,000 as well. So the prices have come off by nearly 55% from its all-time highs. And the markets do believe that if it breaks 60, the worst case scenarios land up to 40,000 on the lower side as well in that case. Having said that, the markets are awaiting for the Clarity Act to be passed in US. There is a discussion paper ongoing in the Indian markets as well. Some framework could be incoming, even if at an initial level there is what the street is looking at. It also is going to be about as and when the market stabilize a bit, you could be looking at some buying coming in as well. A lot of people will tell you that these are perhaps buying opportunities coming in. For this year till time, you have Bitcoin, which is down by 30%. Ether, Solana, Avalanche, Polygon, Ripple, Binance. These are the other major cryptos which have the highest market cap. They're also down anywhere between 20 to 40%. It's in a bearish territory right now, but the street believes that another 20% down from here could be a buying opportunity.
Another 20% down from here. And then?
Yes.
Yeah, okay. So that's, maybe not everybody's cup of tea, but for those who can really play that risk, that's crypto for you. Finally, crude oil. Iran is never out of the headlines.
It's not.
And those talks are on now. And, in between last week, during the budget week, there was one day, I think it was day after budget, oil went to 70. And that was like one more added stress for the equity market. It's cooled off a little below 70. But what are the push and pull factors now in the market?
So the last quarter of 2025, so we were discussing that the crude could go to 50 or sub 50 as well. With the way you're looking at markets, a slosh with so much crude there. Now the consensus seems to be building in sense of 65 or thereabout in sense of a range there. The second half could be looking at higher prices as well. As you said, it really is about US and Iran right now, but the Venezuelan crude will start coming into the market. Kazakhstan is producing more oil. The market's absolutely looking at on where and how much will India buy as well. Most of the incremental growth in the global market seems to be coming in from India now. And if India is not buying from Russia, not buying that discounted cheaper oil, and if India is going to the global markets and buying at market price, that would continue to support the prices going forward. It also is going to be about what OPEC does on 1st of March. That is where the next meeting is. And in this week, you have OPEC and IEA monthly reports coming in also, where they'll tell you on what the global demand and supply looks like. So the next cues would come in from that. But the street is not as bearish as it was in the last quarter of 2025. 26 has started on a positive note. After 3 years of decline, 26 is trading in the positive, with the markets believing you could be looking at further gains for here.
All right, now it makes a lot more sense. Thank you, Manisha, for explaining all the commodity cues to us and exactly what's going on. So still a lot of bullish estimates for gold and silver. Cryptos, not for the faint-hearted.
Yeah.
And oil, perhaps we continue to track some of these headlines out of West Asia.
And don't forget copper, continue to buy on that too, because we're looking at stronger gains there.
Oh, yeah, absolutely. Yeah. Copper, I mean, most metals, I guess, continuing to shine. All right, thank you. Thank you so much for the details over there. That's Manisha Gupta with the commodity market action. Just let's get back to the market, and we're in the final leg of opening bell. We've got the Nifty holding on to a gain of about 116, 117 odd points. Mid caps continue to lead the way, gain of about 0.8% on the mid cap index. By the way, today the advance decline ratio is really solid. You have like over 2,000 stocks advancing on the NSE, just about 600 stocks on the declining side. So it's actually turned out to be a pretty positive day of trade, pretty positive morning of trade at least. Now, we've discussed a lot of the secondary market action, but remember, there are a couple of interesting IPOs that are opening out this week as well. And one of them that everyone really has their eye on is Fractal Analytics. Now, this is a company which is a bit of an AI play. And remember, AI plays are few and far in between in the Indian market. So therefore, this issue is already seeing lots and lots of excitement. Now, to understand more about what Fractal does, what are they offering to the public market, at what price, we have Kanchi joining in from Moneycontrol Pro. So let's get Kanchi on the screen. Let's see if she's with us. And then we'll get you the MC Pro take on this issue as well. Kanchi, yeah, I can see her now. Hi, good morning, Kanchi.
Hi, good morning, Surbi.
Hi. So, Kanchi, I just wanted to sort of give viewers a broad, outset. This is not a very large issue in terms of how much money is being raised. It's not one of those 10,000, 15,000 crores being raised from the market. It's relatively small. Fractal is in the market to raise just under 3,000 crore rupees, 2,834 to be precise. just about 1,000 crores comes into the company. The rest is an offer for sale. So here's a company that's coming out to raise about 3,000 crores from the market. But then why so much hype? It's the AI. It's all about the AI play, isn't it? Let's get your opening thoughts, Kanchi.
Firstly, talking about their issue size, what you said. So initially, their issue was in fact planned for 4,900 crores, but it has been half down by 42% now to 2,834 crores, as you said. So I feel it is more because I think now the management is also getting cautious to given the market condition. And talking about the hype of this IPO that you said, so I think it is more into an AI company. So it is not like the AI open platforms that we use. Fractal is an company which deals more with enterprise AI. So what it does over here, it helps these large organizations to combine their humongous data that they have, like the organized data that they have, along with AI, and it will help them to solve their problem and for better of decision making. So that is where I think the hype is, because this is one of the companies where we don't see doing just the regular AI, but it is helping the organizations out here. So it's not even like those traditional IT companies that we usually track, where they focus more only just on giving technological IT services. But what Fractal does is it helps you integrate AI to make specific business decisions.
So let's understand the size of this company. And, Kanchi, I think it counts a lot of big US companies as the key clients. We have some of the names on our screen. There's Citi, there's Costco, Franklin Templeton, so on and so forth. So just tell us more about the size, the revenue. What is the margin profile of the business right now? Its key segments.
Okay. So talking about the clients that you said, so firstly, like for an enterprise AI, I think the strongest point that they can have is the clientele profile that they have. So like you said, Fractal definitely deals with very large companies. So what it does, it deals in a niche market where it just does not go and work with any organization, but it has set its own three criterias. And only if this organization meets this criteria will Fractal get them on board. So that's why we see like very prestigious names, like as you said, like we have Citibank, we have Nestle, we have Franklin Templeton and Mondelez kind of companies. And they have in fact even worked with a lot of Magnificent Seven companies also. So also because of this, they have like a net retention rate of 121%, which is really very good. Now walking through their financials. So basically, if we see like from FY25, their revenue, they saw a growth of like 26%. And in fact, in just first half of FY26, their revenue has already grown by 20%. So we can definitely see their revenue for FY26 to grow more than FY25. So they are doing a phenomenal job out here in terms of increasing their revenues, and in terms of margins also. If we see their EBITDA margin for FY25, it has already grown by like 930 basis point. So which is also a very strong growth that we see out here in even margins. So where we see like they are working on their operations to get it more better. So we will see this coming ahead. Also, if we see one of their section, which is Fractal Alpha, though it contributes very less right now to their revenue, and it had been in the negatives in terms of margin. But if we see, they have also performed really well, where their margins have improved from minus 140 percentage, which was in FY24, to like minus 40% now in FY25. So, and also we even see a break even coming for this segment in the next 1 year or so down the line. So they are really doing well, and I think they are really placed well in terms of the growth that is expected for the company.
Okay. By the way, let's just, the details are on the screen. The price band is 857 to 900 rupees a share. And at the upper end, then this company is going to command a market capitalization of almost 15,500 crores. So, Kanchi, let's go over the valuations as well. At 900 rupees, what's the asking valuation and how does it sort of compare with some of the, I don't know if we have any other India listed peers, maybe global peers. I mean, how do we understand the valuation?
Okay, so in terms of valuation, this company right now is valued at like 70 times its FY25 earnings at the upper end of the price band, like 900 that you said. So that it's not just Fractal which is asking for such a high valuation, but if we see a lot of other AI companies also ask for this valuation. So if we see like one of its peer that in India, if we can see like a closest peer would be Latin View, which even in Latin View is asking for like 51 times of PI, where PE, where its revenue is somewhere around between 800 to 850 crores, and whereas Plantur is somewhere like 2,500 crores of revenue. So definitely the valuation looks expensive because there is an AI bubble right now. But I think once this AI bubble will burst, the valuation will definitely come down. So right now, where I feel, yeah, it is a little overpriced.
Okay, all right. So we'll have to watch those valuations carefully and then see, how this issue finally does on the street. It's opened out today. It's open till the 11th of February. It is an AI play, and for that, the market is likely to give it a premium, as all things here in India. Wherever you have very niche or few stocks available in a certain theme that's doing well, the market tends to give it a premium. We'll see if that happens with Fractal as well. But Kanchi, thank you so much for joining in and demystifying this issue in this company for us. Thanks very much.
Thank you. Thank you.
Thank you. All right, viewers, with that, it's almost time to call it a morning here on Opening Bell. And it's been a good morning. 130 points up on the Nifty. The mid-cap index is up about, 1%. The bank Nifty is flying, and it's really banks that are leading from the front today. So a solid opening has come up. It's 10 a.m. That's where we'll take your leave. But do keep it with Moneycontrol. We'll keep getting you more interesting updates from the market through the course of the day. Thanks for watching.